Hey everybody, great to see you here. The market's been shaking and baking, but we've been doing okay here. We're okay. Listen, October 22nd, who knew this year could go by so fast? Let's get right into this. I could spend the whole day reciting it, but instead you should just memorize it, so I don't need to do that. Now, the market is still in this retracement. We're in this downward movement, as you can see. And there's some reasons to believe that it's going to continue to move down a little bit more. And let's break down this chart a bit. First of all, you can see the price action. We came down hard here in October. We then rallied up, but the last 3 days have been down days, although Friday was not much of a down day. But look at the purple predictor. The purple predictor led the collapse, and it's still collapsing. And that suggests that the smart money is using this little mini rally as a selling opportunity. Now, down at the very bottom, and the other thing is look at the volume. When the market did the collapse-orama, we saw the volume spike up. Then the market dipped as the market rallied. The volume dipped as the market rallied. Now the volume's a little bit higher as the market's going down. Volume is a confirming factor, and right now it's confirming more negativity. Purple predictor, as I mentioned, is quite negative. Now, down at the bottom is the ADX, and the ADX is a strength of trend indicator, and this is suggesting, because it's so high, that this is actually a strong bear move. Well, I'm still not convinced that the seasonality won't kick in, but let's carry on. Over here, you can see that the selling pressure, which is the red line, is abating. It's not as bad as it was before. But shockingly, the buying pressure is also going down. That's the little green line there. So still kind of this is suggesting a negative picture. Now, one of the things that we always want to look at is, well, how far down is down? Well, that green uptrend line would be a good place to think where the Dow would make a stop. Let's call that about 24,800, which is about where the low was that we made a week and a half ago. Let's take a look at the NASDAQ. NASDAQ has been kind of the leader on the downside, and you can see it still looks pretty poor. We're making lower lows and lower highs, which is the classic definition of a bear market. Now, in the stock market, they always say that a bear market is when it hits 20% correction. And I don't think we're going to get to 20% down. But just because we don't get to 20% doesn't mean we can't have a correction, which is really just a 10% bear market. Hopefully I explained that clearly. All right, seasonality is neutral. Remember, there's no real bearish seasonal period during the year, but there is a neutral period. And remember that the other thing is that normally the market should be embarking on a major up move right now. We'll look at that in just a second right here. Let's take a look at it. This is from Stock Traders Almanac for midterm election years, and you can see that it's a very, very powerful up move starting at the beginning of October. Well, here we are in the middle of October, and the market is moving down sharply. So what does this all mean? Well, what happens is that seasonality says what normally should happen based on some deep underlying factors in the market. Apparently, those factors are not working this year. So that doesn't mean that the seasonality isn't there. But what it does suggest is that, well, if the seasonality wasn't there, then the market would be plunging even more. You see what I'm saying? So the seasonality can be there. We may not see an up move, but the factor that causes the seasonality is still there, but it's not overriding other shorter term factors. So this seasonality could kick back in at any time. We just have to wait, and we have to wait and see. Now, one of the things that you need to look at, let's take a look at this chart right here. This shows the same bullish seasonality, but Ned Davis shows two sharp down moves, including one in October, all right, which is exactly what's happening. Now, Ned Davis's seasonality, which I think is superior to the Stock Traders Almanac one, shows a sharp rally at the end of October up into the early part of November, and then another sharp correction into the end of November, and then clear sailing from that point on. In other words, from Thanksgiving on should be clear sailing. So this particular seasonality is a little bit more sophisticated than the Stock Traders Almanac, but they're both good. So either way, we should see the market rally in here in this fourth quarter, and should, according to the to this seasonality, should start right away. All right, we'll see. Nonetheless, we have to count it as neutral right now, because the way I use seasonality is I say this is what's supposed to happen, but until the market tells me it's happening, in other words, as soon as we start making stronger price movements, then I say, aha, the seasonality has kicked in. Right now, we have weak price action, therefore the seasonality is not kicking in. Okay, the yield curve is helping us out a bit here. Asset allocation, we pointed out yesterday, was a big shift out of stocks and into bonds. And look at this chart. Whoa, holy moly. What this is telling us is that market participants really don't want to be in frisky stocks. They want to be in safe stocks. So that would be things like consumer staples, utilities, stocks like that. They're running for cover here. They still want to be in stocks, but they just don't. They want to shift out of stocks into bonds. And if they're in stocks, they want to move into safe sectors like utilities and consumer staples. Generally, that's bearish. Global markets, you know me, I have not liked these for a long time. Now, the bonds down a little bit. Also, though, look at the purple predictor there. The purple predictor is now weakening in the bond market, suggesting bonds are going to go lower. Well, if bonds go lower, that means interest rates go higher. And if interest rates go higher, the stock market goes lower. You follow the linkage? Very important. Key factors. Let's look at these. The top green line is the yield, and it's made new highs there. Then we have the CRB. Then underneath which is pointing up, suggesting higher yields. Then underneath that is a blue line, which contracted sharply this week. That is the 10-year Treasury in Germany. That's the most important factor over the short term. But down at the bottom, you can see gold broke out to the upside. So here we have kind of 3-4 different angles suggesting higher interest rates. All right, so pretty interesting. All right, now let's look at the dollar. Potential head and shoulders bottom. All in all, I've stayed out of the dollar for a long time because, as you can see, it hasn't been in a trendy market at all. It's been in a gigantic sideways pattern since June. So to me, we just don't want to trade this. But a breakout above that neckline, which would be a little under 96 on the dollar index, would suggest that we're going significantly higher. So that's something we want to take a look at. That might create a trend that's tradable and would resonate through lots of different markets. But one of them is gold. Gold is broken out. We talked about this 2 weeks ago. You should be long gold right now. Now you can see it's not much of a bull market, so we don't want to be too long here at all. Our factors for gold: top one neutral, middle one neutral, the bottom one's pretty neutral either. So that suggests that this breakout in gold is not going to be that great. It's not going to be like a big new bull market and we're going to go to 2,000 an ounce. Oil came down as I suggested. I think we should be approaching a bottom on this dip. Once again, don't really want to trade this because, well, here, we're at the same price we were in April. This is a gigantic trading range. Boring. All right, Bitcoin is down on the low end of its range, still looking for a breakdown more than anything. All right, everybody, thank you very much, freebies. Of course, I know you're all catching a flight to Dubai. I will see you there in a week. And then we've got coming up, we've booked a new option success school. The last one was a sellout, so we booked a new one. And then we've got Extreme Profits back in Dubai. All right, everybody, thank you very much for all of you freebies out there, fully paid up members. Hang in there just a second.